I got a video for you. It's talking about the commercial multifamily, some of the bigger ones. And these guys have been doing videos together. That the video I'm about to show you, they've been talking about this for over 5 years, actually. They said this was going to happen. And it's a video that I think you need to watch, and they're calling it the perfect storm. And a lot of people have the debt coming due. The refis are coming due. There could be cash in refis. And they're talking about some rents are going down for some of these. And, the banks are going to look at the collateral and they're going to say, does this make sense? Because the interest rates went up so much. This is a perfect opportunity for investors to buy these properties way below where they were years ago. There's going to be some motivated sellers for sure. These guys have done videos in the past 6 months or so talking about some of these being worth half the price of what they were at one point. And a lot of it has to do with the higher interest rates. A lot of it has to do with, vacancy, deferred maintenance, some of that kind of stuff. So it's something where you might want to watch a lot of the video or the whole video if you're into that space. But I'm just going to give you a clip of it so you can check that out.
Alrighty, folks. It's finally coming. We've been talking about the commercial real estate distress as an opportunity for us to get rich and get wealthy. According to CRE Daily, there is $930 billion in debt maturities in 2026. This has been somewhat delayed because of private capital, mezzanine financing, and the like. Delays, extend and pretend, stay and pray, all of that. However, foreclosure activity is rising, and the experts think there will be a surge in apartment foreclosures as 60% of the debt that went out in 21 and 22 comes due next year. Jonathan, I'm smiling. It's finally coming. The thing that I've been looking at from all of these bad deals. We're finally going to be able to scoop up opportunities, pennies on the dollar. What say you?
I mean, listen, there is going to be almost $1 trillion worth of debt coming due in 2026, a very large portion of which is multifamily. Mm-hmm. You and I, back while those loans were being issued, which is, now if you think about it, it's kind of scary that you and I have been talking this long, right? Every week. Yeah. But 5 years ago, we were looking at some of these deal structures and going, this ain't going to end well. And, but, neither of us predicted the sudden rise in interest rates, but we knew that that was that rising interest rates, when you structure your debt that way, is always a risk that needs to be accounted for, and it wasn't being accounted for. So here we are, $1 trillion of debt coming due, triple the amount that came due this year, right?
That's a big number. That's a big number.
Yeah. Putting aside the fact that interest rates, as that article says, have gone up by 150 basis points, right?
Yeah.
Between what's maturing and where they can get debt right now, just the sheer volume of it means that a lot of that ain't going to get refinanced. I think a lot of it would not get refinanced even if all the conditions were better, just because of the sheer volume of it, right? And just the sheer volume would push up interest rates because of competition for that money. Agreed. So I think that this is a perfect storm that is about to break on us in commercial real estate, and that means a lot of pain for people who own these things and a lot of opportunity for people who are in a position to buy.
Yeah, so let's talk about that, because that's, again, I think I've said, and I didn't say it hyperbole, I think over the years I've said this is going to be the greatest transfer of wealth that I've ever seen. And I think it has a very good chance of doing that. But to your point, I think there's a couple of things we have to dig into. First, $1 trillion coming due. It would be hard to absorb even if prices were flat, and they're clearly not. Yeah. And by the way, expenses are up, and vacancy. It's just a complete collection of bad for the existing owners. So when I look at this pile and I look at the $1 trillion, I'm like, okay, there's probably
Isn't that something? That video. These two guys are experts in the space, and they were kind of calling it ahead of time. You can watch the video from over 5 years ago where they were calling that this was going to happen. So there's just a lot of people that jumped in the space that didn't necessarily know what they were doing, and there's be some motivated sellers. It's going to be a great opportunity for investor buyers and for wholesalers to assign these deals. There could be some short sales. These banks may want to get these off the books. You can do residential as well. Obviously, this video is a little bit more on the commercial multifamily stuff. So for Minnesota, if you want to see a two-sided marketplace where there's opportunity, where there's the wholesalers that want to assign these deals, and then there's the investor buyers, you want to go first Tuesday of every month, MNREIA. They have a haves and wants section. Starts around 7 o'clock before all the speakers and so forth. People grab the microphone, and usually they identify either as the seller, the wholesaler, or the investor buyer. Investor buyers are just backed up with either cash or hard money. They are ready to buy this stuff. The desire is there. It's been there a while. The motivated sellers may show up. They may, in some of these cases, they may end up being first contacted by a wholesaler who has a network of people that they communicate from some of their marketing and some of that stuff. And then what will happen is the wholesaler brings the value by actually asking all the right questions and solving the problem. The first half of the problem, at least, asking all the questions of the motivated seller. Sounds like you got a building here. Tell me, how much of it's vacant, how much of it's rented, have the rents come in recently, maybe how much of the building is Section 8, what are all the different expenses on the building. They gather a lot of that information, find out what the underlying financing is and what kind of interest rate and how it's amortized and what the balloon is on it and so forth. Those are all important things for, investors to know. And then as they've gathered all that information, they've provided some value by getting that first part of it. And then what they're going to do is motivated sellers going to feel stuck. They might be out of money. They can't do a cash in refi. They maybe aren't operating it well. They don't know how to, get the vacancies rented. Maybe one of the partners disappeared. Who knows? But there's just a lot of different situations where maybe the bank's not happy. They don't want to work with them or something like that. But what could happen is that wholesaler can take that data, that information, that motivation, tell that story on the microphone at the haves and wants at MNREIA, and then say, this is the situation, this is what I got, this person, this is what size the building is, this is how much is rented, this is how much is vacant. And just give a minute or 2 minutes of information, and then what will happen is the more information you give, the more, you can't just say, hey, I have a building, the seller's thinking about selling it, and I think it has cash flow. Nobody's going to really contact you on that because they got to do all the work and go run over to you and stuff. They're not going to do that. So you want to lay it out on the table. You want to position and make it really, really obvious for the right investor person to actually take that cash or that hard money and actually see it as an alignment, as a match. And so they're going to say, yeah, this is exactly what I'm looking for. That sounds like a good cash on cash return. Sounds like there's a lot of upside because I could rent out a lot of the units and raise the rents, value add. That's probably speaking to them. So they'll take the initiative to go start looking at it. And of course, there'll be renters there and stuff, so it'll be a little bit tough to maybe show all the units, but maybe you can show some of them. And the wholesaler can talk about scheduling appointments and all that kind of stuff with the seller and make contacts with the renters and all that kind of stuff. So just keep that in mind, that the seller who's motivated sees that they have a problem for a lot of different reasons. There's a solution out there, and there's people with the money and the hard money that can operate, pay for it, and just have a different creative outlook on it. And they can either pay cash for it, probably at a discount, or they can buy it on seller financing. So those are all options. So make it over to MNREIA. You can look up the website to see the next first Tuesday haves and wants, and have fun for the opportunity.